Hey, everybody. Welcome to This Week in the Markets. Good to take the lens cover off. Great to see you all. I hope you're having a great weekend and that Sunday's been treating you well. You're getting ready for the upcoming week. All right, so we have a couple of things that we are looking at, and you'll notice that I'm starting off the show with the economic calendar. This is the calendar over at Trading Economics. A big fan of this calendar. It's a great alternative or really addition to the Forex Factory calendar. So if there is just one thing that you might do over the weekend, let's talk for a moment about weekend prep and really how easy it can be. Weekend prep can be as easy as really three things. And any one of these three would be probably great. All three would be terrific. Number one, check out the economic calendar. And it's going to be one of three calendars. It's going to be Forex Factory, which I think is a great way to look at a global economic calendar and the different hot zones. There's high impact, high volatility events that are going to affect our week. Trading Economics is a great addition because sometimes there'll be FOMC speaking engagements that may not be listed over at Forex Factory. So this is a great supplement. And the last one is specific to earnings season, Estimize. And I'll look at that to prepare for earnings that are anywhere from 4 to 6 weeks before release. So economic calendar would be a great way to anchor your week, a great first step to prepare for the upcoming week. The second thing I would highly recommend is take a look at positions that this is a really basic one, right? Take a look at positions that you took from the weekend, right? Just make sure they're front of mind. And at the same time, take a look at positions that might be close to your triggers. Now, if you're using the process that I teach in the Sector Secrets Mastery, your platform's babysitting that for you. So not as big a deal, but great to keep that, again, front of mind. And really the last thing is something that I like to do, which is I'll go through my multi-charts. I'll take a look at the relative outperformers in the indices and the stocks. If I do all those three things, which I do week in and week out, and a lot of that homework is ultimately what ends up in This Week in the Markets, which you can check out at thisweekinthemarkets.com. A lot of that ends up there. I feel on Monday morning, I'm already good to go. I've already hit the ground running. I'm not scrambling. The only thing I need to do is make myself a nice latte before getting started. So that's a great way to start off the week. And that's my process. All right. So let's get to our questions. All right. So there we go. And first question is the ES and the NQ really overbought and expected to have a significant pullback? Everyone's saying it's any day now. I'm sure they are, right? Everybody's saying it's any day now that the market will crash. Oh, wow. That's interesting. Kindly provide a neutral and fair analysis. All right. So let's jump into it. First of all, anytime I am looking at, what would be really nice to have here to kick off our session is some charts. There we go. Let's put these charts in view. All right. So taking a look at our charts here, and to answer the question, let's get this on a nice dark layout. There we go. To answer the question here, and it'd be good if I've logged in as well. I logged out of TradingView right before I started the show. By the way, I'm glad you all got to see me do that, because what I do is I log into TradingView with my TradeStation account. So I've got the live futures as we kick off the show. So let's go back to the question. The question is the ES and the NQ overbought? Are we expecting significant pullbacks? And might there be a crash? Let's define all that. And let's start off with, I'm going to actually start off with the NQ, because the NQ right now is the leading in terms of bullishness. It's the leading index. It's the one that's more bullish than all the others, meaning Russell, Dow, S&P. And why is it leading? It's leading because the pieces of it, the XLK tech sector, the XLC communication sector, and even the XLY, which was recently helped out by Amazon, breaking above the 200 exponential, these are all moving higher. So if you want to view those as the three cylinders to the motor that is the NASDAQ, they are all moving higher. And that's why the NASDAQ ultimately is moving higher. Now, if I take a look at the S&P, is not as strong as the Nas, although obviously we pulled up through some higher highs, but the S&P is a little bit lagging compared to the strength of the Nasdaq. Why is that? It's lagging in that regard comparatively, right? Because of XLF and XLV. So the two other sectors that the S&P has to deal with, XLK and XLF and XLV, all three of those, the two ones that the Nasdaq doesn't have to deal with and the two that the S&P does are financials and healthcare, neither of which look all that great. So ultimately what's happening is tech is having to pull the S&P up pretty much all by itself, hence it's lagging. So it's really arguably firing on maybe one of three cylinders. That's where we are. Now, let's take the second part of that question. Let's talk about what is a crash, right? It cracks me up when the terminology out there, uses that kind of hyperbole. A crash, a lot of times can be just associated with being down a certain percentage from the highs, and it's usually 20%, something in that realm. Is 19% any less a crash and 21% a catastrophe, right? So what I'm trying to say is a lot of times these numbers are just sort of numbers that we have all accepted as the measuring stick, where we can pull up a new high and 20% below that would be a quote unquote crash. I think there'd be panic far, far, far before we see a 20% pullback in any of these indices. But the question always has to be why? What would be the catalyst? And let's be a little bit more reasonable about what a pullback would be and which ones are setting up for a potential pullback. A pullback would be, for me, a 50%. So let's remember, a down day isn't necessarily a pullback that's useful for a buy the dip, and a buy the dip should only be done in a trend. So if I'm going to define what a pullback is, I'm usually starting off ideally at 50%, maybe 38.2. Right? And if it makes it all the way down to 618 and it's a trend, that might be useful as well. So those are three very common retracement percentages that would simply be considered just a pullback or a reversion, right? Now, if I'm looking at the Nasdaq's in buy the dip mode and it's the strongest one, and I would welcome a 38.2 or a 50% or even a 618 pullback. And then if that pullback can accompany volume, automated support or resistance by way of the Darvis, those will be useful, right? What's not useful, and this happens so often, is calling for crashes and apocalypse and Armageddon and whatever else the hyperbole is designed to scare traders and investors. We look at the trend, we look at what reasonable, useful pullbacks for buy the dip may be, and then we go back to really the first step of my week, which is what's on the calendar. Some of those calendar events, whether that be this Friday's PCE, whether that be, let's see, what else do we have? FOMC meeting minutes this week, or whether that be any of the uncertainty around the debt ceiling, all of those things can create weakness. But a crash is a 20% from high, really, really unlikely. And probably the only thing, if someone was to say, okay, Rog, but what would be a catalyst if we're talking about those things? If we were to default on the debt ceiling, that would create certainly a lot of fear. And that's the way that I look at that. All right. So next question is, what are the key levels for the Nasdaq and the S&P this week? And oil and natty gas. All right. So as far as key levels for natural gas, if you take a look at the daily time frame, and if we do get a pullback, this is what a pullback would look like. Let's start to put some lines and levels behind the ideas here. So if I were to look at, and let's do this together here. If I were to look at what a useful pullback would be, all right, I would look at what the most recent swing high to swing low was. And then at that point, I could pull up a 13,486, 50%, and even a 13,372, 618. And that might be useful. The 50% has a little bit of a volume ledge associated with it. And that also could be another reason to expect some support in that area. Now, this is on a daily time frame. Remember, we can do analysis on a 5-minute day-to-day. We can do analysis on a 1 hour, which would have different levels, probably relative to a daily, more levels, number one, just in terms of the number of price levels that could be useful. And then we'll frequently update because we're getting so many more candles per day. Taking a look at the S&P, I would really love to see a pullback to the point of control at 41.41, basically 40.41 right here. And that would be very useful. That is the volume ledge. That is the level with the most volume. If I'm going to take a look at crude oil, moving out to crude, probably the most important thing for crude to do today, not today, this week, as I look at it today, even before the markets really get going, is can we get above near-term highs that were established, say, on the May 10 high of 73.89? So can we get above 74? And that would be important for the bulls to prove that they've got momentum on their side. For the bulls to prove they can step in and support the lows, we need to see buyers step in around $69.50. So that's where the battle is going to be fought. And if I am bullish, both those levels, one a momentum level through resistance, the other support at the floor, could be useful. And I take a look at natural gas. Natural gas is a market right now where we are not seeing supply and demand in any kind of balance or imbalance. When there is too much supply, there is resistance and there is no movement to the upside. When there's not enough demand, there's no movement to the upside. And if supply continues to outpace demand, there's no movement to the upside. And there really encapsulates the problem with natural gas. Is it in a downtrend any longer? Last week was a very big week for buyers who were trying to break that downtrend and trying to show that there is a little sign of life through the 2.550 level. It will be very important for that level to be supported moving forward. And if we can continue to put higher highs and, more importantly, higher lows in, which we actually have been fairly consistently since the 5th of May, this could eventually go from the downtrend to the neutral to an uptrend. And once we have an uptrend, at that point, the strategies that we can deploy will be different. The levels that we're looking at will be different. But for now, we're just acknowledging that there's some near-term support that really needs to be supported at about 530. If we were to go back down and test the lows at 204, 205, that would also be a potential buy level. But the market environment, the condition, the structure, choose whatever verbiage you like, that has to remain in a neutral environment to be useful for oversold buys. All right, next question. Can I check out the 6E? Absolutely. Let's check out the euro. Thank you for the question, Howard. All right, so let's pull up the 6E here. That's the euro for those of you that don't trade the euro futures, and it's going to move opposite the US dollar. So the 6E is the euro versus US dollar in the futures world. And anytime you have 6E, 6B, 6C, 6J, they're all traded against the US dollar. They're just not quoted in that way, the way, say, the Forex market would. In terms of where the European Central Bank and where the Federal Open Market Committee, the Federal Reserve, so the Federal Open Market Committee are those voting members, the Federal Reserve is the governing body. Where the European Central Bank and the US Central Bank are right now in their respective tightening cycles is, well, frankly, the European Central Bank is still, we can say, on the upswing of their rate hikes. They're still going to hike rates. There's a very good argument, especially if we look at the Fed Fund futures and look at the target rate probabilities. There's a very good likelihood. In fact, it's the probability that the U.S. Central Bank is done hiking. Maybe one more quarter point hike, but for the most part, the broadest expectation is they're done hiking, and the Federal Reserve is going to start cutting latest in November. We'll see what happens on that end. But if I take a look at the euro compared to the US dollar, European Central Bank is hawkish. That's bullish for the euro. Bottom line, I still am a buyer of the euro. I would like to be a short seller of the US dollar. And I mentioned the US dollar in This Week in the Markets, the upcoming issue that'll be released tomorrow. Look at where the US dollar index futures are. This is the dollar index basket, which is 58% euro And you'll notice we're right up against the 200 exponential. In fact, this is a moving average cross. There's a fast exponential moving average, and there's a slow exponential moving average that makes up what we call the propulsion. The 8 and the 200, when they cross and interact with price, those dots appear where a 200 exponential moving average would. But you'll notice it's sort of a self-correcting signal-based exponential moving average, again, with that fast exponential and that slow exponential moving average. That is resistance, and that coincides perfectly with the macro outlook of the two central banks reaching a price-based resistance level. Definitely bearish dollar, which is to say bullish the euro. Thanks for the question. Let's see. Next up, NASDAQ. Should it rally this week? What do I think? Well, let's take out the idea that anybody on this planet knows what's going to happen on the NASDAQ this week, except for maybe Jerome Powell. And until he gives me his NASDAQ target, or really his S&P target, or until he starts writing a newsletter, we're just going to have to do the same thing all us mere mortal traders have to do, which is not whether or not the NASDAQ continues to rally. The question is, and it's a great question, right? But let's take it from a standpoint of breaking it down to a strategy that we can then deploy. Number one, can we buy the dip on the NASDAQ? And the answer is absolutely yes. That's the plan. What are the things that could create much more volatility for the NASDAQ? Obviously, concerns about the debt ceiling. So we weigh the uptrend against catalysts for potential and very dramatic movement lower. All right. So once we get that understood, the next thing is, where is support, right? It's less useful to know whether or not the NASDAQ's going to rally. You might say, well, Rog, why wouldn't I know that? Want to know that? I guess my answer is nobody knows that, right? So it's yet less useful to ask a question that has no answer. What is helpful is, at what level can I buy the NASDAQ? And I don't know that I would do that on the 1 hour chart, on the daily chart. I might think about the 1 hour or even the 5 minute. And you might ask, well, Rod, why would we shorten the time frame if we're looking for a pullback and an uptrend? Because of those aforementioned issues of whether it's the PCE, whether it's the FOMC meeting minutes, whether it is the some unforeseen debt ceiling narrative that rears its ugly head, whatever it may be. The better way to deal with a lot of uncertainty on the economic calendar and a lot of uncertainty generally is shorten the time frame, so you can get in, get out, start over, right? Rinse and repeat. So I'll be looking really more for possible support on the 1 hour NASDAQ, or maybe even day trade it, knowing that no one knows what a market's going to do week to week. No one knows if we're going to keep punching up to higher highs, but we do ask ourselves, what can we do with support in an uptrend? And that becomes the building blocks of a potential entry. Thanks for the question. All right, next up is, would I trade Google and Microsoft as a day trade? John, we look at it daily. Yeah, in the sector secrets mastery. And the question is, again, would I trade Google and Microsoft as a day trade? Yes. And let me give you a few reasons why it's so interesting to me. If I'm looking at a day trade, 5 minute time frame, looking for opportunities to buy or sell Google and Microsoft, number one, both of them are heavily weighted in the NASDAQ, right? And so the why will come first, right? So both of them are heavily weighted in the NASDAQ and the S&P. So why would I look at them, right? The next one is, how would I then look at them? And it's really important to know why. Because if I'm looking at Google and Microsoft, we must start with the NASDAQ, right? So if I have clarity on the bigger picture index, and then let's tackle Google first, John. So how would I? First of all, I want clarity on the NASDAQ, meaning directional clarity. The second step would be, if it comes to Google, do I have directional clarity on the XLC communications? And then the last comes Google, right? So typically my day trading is just going to be waiting for a particular setup. When price reaches that zone, off I go. So in this case, it might be an hourly price movement range. There's no way to say on a Sunday at 6:20 what strategy I'll end up deploying, John, but I'm going to look at any one of probably 3 strategies that I would like. whether that be a trend following strategy, whether that be overbought, oversold with the hourly price movement ranges, or maybe my V score and some anchored volume weighted average price. Those are three things we're mostly looking at now, emphasizing volatility and volume. So that's sort of the general how, but the specific how is, why would I look at Google before I even get to an individual stock? The why is so important when we get to the stock level. And that's where we start with the NASDAQ, move to the XLY, then to Google. Same thing with Microsoft. We start at the NASDAQ level. So why would I want to look at Microsoft? Why is it even deserving of our time, attention, money? So if I get clarity on the NASDAQ and I have clarity on the XLK, where Microsoft is the number 2 and sometimes the number 1 weighted stock in that tech sector. And then lastly, is Microsoft working with that trend? So I think a lot of times before the how needs to come the why. If we can think why we're looking at a certain stock, then the how becomes a whole lot clearer. Because frankly, maybe Meta looks better on XLC on any given day, or maybe Apple looks better than Microsoft on any given day, right? So if we can break that down and not fall in love with the stock, but fall in love with the process that would lead us finally to that stock, we're going to be in really good shape. So thank you for the question. All right, next up is, let's see here. Hang on, I'm just trying to find the next question. Thank you for all the comments. I appreciate that. I'm reading them right now. 2 quarters, let's see, iPod mentions like 2 quarters of negative GDP last August, which they said no longer means a recession. Exactly. To your point, the Federal Reserve is the one that's writing the reality, right? There's a great quote, I reject your reality and substitute my own. It was actually from the guy from Mythbusters, but Jerome Powell might as well utter that every week, right? Mike R says, always beware those perma bears. Agreed, right? I do try to speak from data. And if that's truth, then we're on the same page, Mike. I do try to speak from the data. I do try to speak from the trend. And a lot of folks like the kind of analysis that's predictive in manner. And I get it, that comes from television. But I think at the end of the day, traders don't predict, we react. We're counterpunchers, right? So I hope that once you know what it is that I'm looking at, you can counterpunch right along with me. All right, what are my thoughts on gold and silver? Asked Jay Silvestri. All right, so what are my thoughts on gold and silver? Starting with gold, I do like gold to the upside. I absolutely do. Gold has been quite volatile. It's traded down into a zone of some pretty interesting support. And that's going to be with the automated Darvis levels. It's not been an easy symbol to trade because the concern about what ultimately the nominal yield of a bond is going to be, and where are we on interest rate on inflation, right? The nominal yield of a bond minus the rate of inflation is real yield. If real yields are going up, gold is going down. If real yields are going down, gold is going up. And we're going to have our PCE, the Federal Reserve's favorite, their pet inflation number, this Friday. So gold could have a very big day coming up, but not till the end of the week, 8:30 a.m. on Friday. Would I like to buy gold? Absolutely. Do I know I'm going to have to take some Dramamine while I'm trading it? Probably very, very likely. Next up is silver. I like silver as well, but silver is right now very volatile. However, as of Friday, it formed a very important price-based pattern, the minor low. And that minor low is a 3-candle, sometimes 4-candle pattern that shows where support could be building and then the momentum that would come from it. And by breaking essentially the 24 handle on silver, the SI futures Friday, that minor low was triggered. As long as price stays above essentially 23.48 and ideally can continue to find support at or even above 24, that pattern is going to be confirming consistently, and that's what we're going to be looking for from here on out. I like the long position on silver with the minor low finally having formed since the massive sell-off that we saw on the 11th of May. All right. Next up is, bear with me here, gang. Oh gosh. Tim, I'm looking at your question. I don't know what symbol you're talking about. Should I be looking at 104, 105? Let me know what you're looking at, and I'm more than happy to answer that. It might have been a symbol we were looking at already. Can we take a look at the ticker Wolf? Sure, King. Tim, I'll look for your response. All right. So we're taking a look at the daily time frame of Wolf Speed, $44 stock in a fairly relentless downtrend. King, I don't know if you're looking to get long. I don't know if you're looking to get short. I would most definitely favor the short side of this market. This is a short the rip. So as much as we talk about buy the dip, this is a short the rip. This is the kind of opportunity bears taking advantage of a downtrend would look for. So if this thing comes up to, say, a volume ledge like the 46 to 46.5 area, that could be some significant resistance for Wolf Speed. As long as the trend is down, it's short the rip. And that's ultimately what I want to focus on in that regard. Can we get a bounce to that level? And at that point, we can move to the downside with either long puts or a short position. All right. The question from Tim, Starbucks. Sure. Okay. That helps. All right. Taking a look at Starbucks. What do we have here? Daily time frame of Starbucks. Overall in an uptrend, but it's really lost a lot of its swagger since earnings, right? And ultimately, since that downtrend, it's been very, very choppy. So really, ultimately, if I'm looking at a move to the downside and then I'm not seeing an immediate reaction to the upside, buyers are basically saying, you know what, this area somewhere between 105, 106, maybe 107, we like buying here. We're okay with that long position because we have a volume ledge at basically 104.80 and a point of control at 106. So that tells me where the volume for support is coming in. Volume for support can be decoded as demand, right? Volume at support is showing previous demand. Traders have executed trades there and it's holding. However, support alone is not what creates the movement to the upside. Higher highs beget higher highs, or momentum begets more momentum. And if I'm looking at a momentum opportunity, that is likely waiting for price to break higher. Let me zoom in just a little bit here. We're waiting for momentum kick in. Price is probably waiting for a break of 108.30, which would be just above both the May 8 and the May 10 highs, right? So we're looking at trying to get a break just above that level. And I would definitely keep an eye on that if you're looking for bullish momentum to confirm follow through or getting long. If not, join the volume. You see the two volume ledges, and that's where, if you're looking for some good company for support, that's where I would look to position myself in Starbucks. Use the volume ledges, and that really is your support, and volume plus support, there's your demand. All right, gang. Thank you as always for joining me for our This Week in the Markets live show. If you haven't checked out the This Week in the Markets report that comes out every Monday morning, bright and early, you can do so over at thisweekinthemarkets.com. You can grab a $7 trial. Check out what we're doing for 30 days. You get a video and a report each and every week, and it will set you up for what it is that I'm looking at for the coming week. It's a perfect supplement to what we do in the Sector Secrets Mastery. I like to remind my Mastery folks, you all get that service for free included with your Mastery. So if you're a Mastery member, This Week in the Markets coming out tomorrow morning. If you'd like to be a Mastery member, come check it out at sectorsecrets.com. And if you want kind of a baby step into, Rod, what's a really easy way for me to see what kind of trading, what you focus on? Check out thisweekinthemarkets.com. It's a great way to understand the process that we use to build a watch list and the kind of levels that we trade in the Mastery. All right. As always, gang, be good to each other. I'll see you tomorrow morning for charts and coffee. If you want to check out my Monday picks video, it's still posted at the Simpler Trading YouTube channel, aptly called Monday Picks. All right. Until then, gang.